Hey everybody, it's Wayne back at you with an options premium update. I know we technically have a few more days before the calendar year of 2025 is done, but guess what? According to my spreadsheet, week 52 is a wrap. That means I can give you guys an official tally of how much premium I made this past year. Now first, let's take a look here at the brokerage accounts that I'm using to trade options. Primarily, I'm using my individual taxable Robinhood brokerage, and right now I'm sitting on just under 400K in the account. Now this past year I did see a gain of 14%, so I didn't quite beat the S&P, but I don't really use this brokerage account to actually beat the S&P, but I am holding on to positions that I do intend to remain long on. Let's go ahead and take a look here at a couple of those, and you can see of that 400K portfolio, about 307,000 is comprised of individual stocks and ETFs. And then individual cash, I'm sitting on right over 92,000. That number is actually a little bit lower because of recent, I've begun to park a lot of cash into the stock ticker SGOV, which gives me a nice, I'd say just shy of a 4% APY, and I've got just over 22,000. So if we take the 22,000 from here, and then we add that to the 92,000, I've got a fair amount of cash. And that's really important to my strategy because as you guys have known, I have focused more on cash secured puts. And I'm gonna be honest, if you wanna be successful selling options, you don't need to have the biggest portfolio. If you are going to wheel a stock, meaning that you are willing to take assignment and then you turn around and sell a covered call, that's great. I don't think you need to have the biggest portfolio. But for me, this past year, I have avoided assignment at all costs. So my strategy is not necessarily the wheel, although I do sell some covered calls. I am primarily focused on selling cash secured puts. All right, let's go ahead and get into it. We'll start with what the initial goal was. Remember, last year, if we scroll down, I made $84,116. And yet, my goal for 2025 was much more conservative at 52,000. I just was unsure as to how the markets would react to our reelected or newly reelected president. And I got to tell you, if you remember back to April of 25, you certainly felt the squeeze, right? We saw the market see, crazy lows because of the tariff drama. And then just a couple of months later, the markets continue to amaze me. And we're seeing record all-time highs. But what that means when we see the lowest of lows and the highest of highs is volatility. And if you were an options trader like myself, volatility is actually a good thing for premium. So I kind of spoiled it when I scrolled down, but we'll make it official. This year's goal was 52,000, but I actually reached that right around week 31. And so I had revised my premium goal to 88,000. And that 88,000 obviously would put me ahead of the previous year. And that's always the goal, if I'm being honest. As a traditional buy and hold investor or as a dividend growth investor, I always want to beat what I made last year. And so I thought to myself, if I can make 88,000, that's 4,000 more than what I made last year. And guess what? You see it right here. We actually beat that significantly. That's right. Year-to-date total in premium, $92,295. Now, some things that I've done within my spreadsheet, I'm able to capture more relevant data for me. And so some big things that I wanted to focus on, what is my weekly average that I'm bringing in? Obviously, I've got my lifetime premium here. Remember, I've talked about this in previous videos. I began my options journey back in 2022. I've been very vocal about, I was a newbie when it came to the market. In fact, even though I retired from law enforcement in 2020, at that point, even though I began collecting my very healthy annual pension of just over 100,000, I didn't really have any type of financial background. I wasn't savvy. I didn't even have a brokerage account. In fact, I didn't even own an individual stock or ETF until my early 40s. And so with that, I wanted to become a traditional buy and hold investor, but I came across Brad Finn's YouTube content in which he talks about trading options, covered calls, leaps, cash secured puts. And I had recently come into a fair amount of cash from a real estate transaction. And so I wanted to take that chunk of cash and not just buy stocks and ETF, but I also wanted to see if I could dip my toe in the water of selling options. And so I began in 2022, and over the years, I learned a lot, made a lot of mistakes. I don't know that I lost too much money, but I certainly came to realize, for me, my strategy, especially in 2024, it pivoted to selling cash secured puts. And that's been the strategy. And so I'll show you this spreadsheet to kind of prove that. Take a look here. In 2024, I sold a total of 241 calls. We look at the number of covered calls I sold. In totality of this year, it's only 98. And that's because, once again, cash secured puts is the focus for me. So the bulk of that, 92,000 is going to come from selling puts. Speaking of which, that's a pretty hefty number, 93,000, but I'm telling you right now, it's a little bit misleading. And in the spirit of full transparency, I do want to talk about one of the biggest losses I took this past year. So here is my spreadsheet looking at the cash secured put side. Again, you can see a total of 618 contracts is how many cash secured puts I sold in 2025. And in my spreadsheet, I categorize, or I give a disposition of, either it expires, or I close early, or I roll close, or it is assigned early. And when a contract is assigned early, and by the way, if you've been selling puts even for a short amount of time, it's going to happen to you. No matter how good you are, you can never compete with market conditions and volatility. I always say that. And this year, I was assigned early on a few contracts. Now, the first two are SOXL. This is from my wife's brokerage. Not too worried about that. Even though it was assigned early, I was able to turn right around, sell a covered call at or even above my cost basis, and I was actually able to make a clean profit on that. The same thing goes for DJT. This honestly was really foolish of me to get too deep on this particular stock ticker. I was kind of riding the highs of 2024 when DJT was just going through the moon. And so I'm willing to admit that these two early assignments, it's just foolish of me. But again, the loss wasn't too significant. But I want to point out this particular stock ticker right here, which is Lululemon. Now, Lululemon, this endeavor began in 2024. And I think it was after a very, very poor earnings report and outlook. The share price of Lululemon continued to plummet. And I found myself, rather than buying to close at a loss, that probably would have been the thing I should have done. I thought I can roll my way out of this situation. So let's go ahead and take a look as the journey begins. And things were really going good for my endeavor with Lululemon. And there you'll see right where things become problematic. I had wrote a cash secured put in December of last year, and after earnings, boy, Lululemon just continued to plummet. And so what you're seeing here in these four subsequent contracts is me attempting to roll down and roll out. By doing that, I always was able to lock in net premium profit. The problem becomes as 2024 rolls into 2025, I still was not able to keep up with the significant drop in share price. And so yes, in April, I was able to roll down and roll out. So I got a better strike price. Again, I was at 360. I went down to 350. But in order to lock in net positive premium, boy, I had to kick that can all the way into 2026. And so I thought I would at least have a year plus to see Lululemon recover in some form. But then on July 31st, take a look here, Lululemon had gone all the way down to $200. So you got to remember, anytime there's a cash secured put, right, there's two people that are looking at the profitability of that contract. And in my situation, even though, right, I had received, right, $9,400 in premium, the person on the other end of this contract, they looked at the value of that contract and said, even though this thing does not expire, right, for another, nearly a year, it was worth it to them to exercise early on the contract. So that meant for me, I was forced to take assignment of 100 shares at Lululemon at a cost of $35,000. And you just saw, right? July 31st, Lululemon share price was going for about $200 a share. So that really posed a dilemma to me. So I'll tell you exactly what I did. And again, hindsight's always 2020. I think what I should have done is back when Lululemon just had that horrible earnings in late 24 and the outlook was not any better, I should have bought to close at a loss. But I thought I could roll my way out of that situation until I was assigned right here on July 31st when Lululemon was right around $200 a share. So I decided to go ahead and cut my losses. And you'll see here on August 1st, I sold my 100 shares at a share price of $196.73. So that means, if we take my calculator here, right off of the bat, I took a $15,000 loss on that overall Lululemon assignment and then selling my shares. Now, you might say, well, Wayne, how does your math work? Because you just showed us that you made $92,295. You talk about net premium. That includes the losses. That includes the profitable contracts. Got to remember, the reason that $15,000 loss is not included in this number is because I'm tracking net premium. Now, if I had bought to close at a loss, let's say I paid right, $19,000 to close that out, then yes, that would be a part of the net premium documentation. But because I was assigned, right, technically I still made $92,295. But in the full transparency of things, let's go ahead and take my 92,000, we'll say 295, and then we're going to go ahead and subtract, we'll just do 16,000 just to really put a buffer on there. That really means, though, as excited I am as to say, oh my goodness, I made 92,000. If we factor in the big contract loss that I took this year, that brings it down to about 76,000 is how much I made. The reason I'm, not too concerned about that one contract is because, again, I wish I had some great insight. I wish I could say, you know what? If I had known this, I would have done this. In reality, and we'll go back to Lululemon because you're going to think, Wayne, for being bit by this dog, you got right back into the saddle. And I did. And that's the crazy thing about selling puts. I really couldn't be mad at Lululemon. And in fact, when they saw 52-week lows, you can see I have since written, easily another dozen plus contracts on Lululemon, which, by the way, almost all of them I've been able to close out early. So even though I took the loss, I still went on to make a bunch of good premium on Lululemon. So the point that I want to make is I couldn't be mad at Lululemon. I had to be mad at me not understanding, right, the importance of earnings and volatility and, and stock conditions and consumer staple, all these things that you need to know about with selling puts. I don't want to ramble on. But at the end of the day, this is what I've learned from some of the great option traders out there. And again, you guys know I always give credit to Brad Finn, but he always talks about zooming out and looking at the big picture. I got to look at this lifetime premium total. I began my options journey back in 2022. And since then, I've made a whopping $267,000 in cash. That's in cash. And so, yeah, it sucks to take, a 15,000, almost 16,000 loss by being assigned early. But if I take that 16,000 and I, subtract it off of the lifetime premium, I'm still sitting pretty good at 50 plus thousand. So there you have it. The 2025 year of premium is 92,000. Previous year was 84,000. Boy, did I mess up on how I was tracking these contracts early on in my journey. So I can only tell you between 22 and 23, I collectively made 90,000. I suspect that in 23, I probably made about 60, which means 2022, right, would have been sort of a soft launch. So that's the cool thing about this lifetime premium. The goal that I have for 2026 is 95,000. I really do feel at this point, especially with the size of my portfolio, I can easily squeeze out 95,000. And this past year I also drew a lot of cash down on my portfolio because I'm also a buy and hold investor. So I'm going to give a shout out here to a future video that I'm going to be releasing talking about my dividend growth portfolio. That's the great thing about premium is I've taken that cash flow and I've invested in, buy and hold ETFs like VOO and SCHD, and I am focused on income as well. So this year, I'm not going to be drawing down as much cash from this Robinhood brokerage, which means I'm going to have a bigger stockpile of cash, which means in theory, I could sell a little bit more puts than I do on average. And I would like to get back into selling puts on what I think are quality stocks. The problem with quality stocks, Meta, for example, it's just so expensive, right? To sell one contract, you have to have about 60,000 in collateral. I'd like to get back to writing puts against Meta, but that's going to take some cash flow. But I now have it because, quite honestly, I'm not drawing down as much. So I hope you guys had a fantastic year when it comes to selling options. I would love nothing more than to hear from you. What are some big wins? What are some big losses? What are some learning lessons? Throw it out there in the comments, and I'm looking forward to seeing you guys in 2026.